Good morning, good afternoon, good evening, traders from across the globe, and welcome to the 1041st edition of Short-Term Trading Live with Oscar Carboni. Traders, this video is being filmed during the day on Tuesday. It's for trading for the rest of Tuesday and Wednesday. That's 7/02/2013. I showed you this very same gold chart in our last video, so it's interesting and pay attention. We know this, futures trading can be extremely risky and cause substantial financial loss. Futures trading is not suitable for all trading accounts. All right, traders, rock and roll. Video number 1041, let's go. The gold chart. I gave this gold chart to you a couple of weeks ago. Well, we've been looking at it for months now. But about 8 days ago, I showed you the flag and said, look, we're going to come out of the flag. We did come out of the flag. I had this down arrow. Then about 3 days ago, or 2 days ago, I should say, I put a cross mark or an X over the down arrow and said, now we start to go back up. Well, we did go up for 3 days or 2.5 days. And guess what Omni does for us last night, of all things? Guess what Omni does? Last night, Omni says you can go short this thing at the price of 12, where were we last night? We were trading at 12.66. Omni says, you know what, Oscar? You can go short right there. You know what the high was of the day? The high was 12.67. Go, Omni. It told us gold was done and that gold would break, so we sold it right there. And look what the gold did. That is technical analysis firing on all 8 cylinders, OmniX. It was very easy to do. It was simple analysis that told me, watch for the upside and then watch for the downside. Bravo to you, OmniX, who took the gold trade today. We do know that not all trades work, so always use stops, and futures trading is risky. But, you know, Omni gave us the turnaround day right to the T down here and told us on Tuesday we could now sell gold, which was an Omni. So now we're looking for more downside, and I'm expecting that the holiday reversal has happened in gold. Remember this, the holiday is literally Thursday. Today is the end of Tuesday or middle of Tuesday. You had reverse, a little reverse today, and it's probably enough. I think gold takes it on the chin moving forward. So that's the gold chart, and I think that that's a pretty interesting chart. Let's move forward. Traders, we're looking at the emini S&P chart, emini S&P. We had a target. If you remember, I used this exact same word. I didn't even rewrite it. I just moved it up here. The first target we had was down here. And I drew this little elliptical, and I said, I think we come down here now because we were up there to the bottom of the channel. We hit that. I had the word target there. I removed it and put the target up here, and we've been rallying up towards that target since. Now, we are in this parallel channel, but traders, you could call that a bear flag if you want, right? You grab a flagpole and put it right here. You can call that a bear flag, right? A big one. But we are in a bull market, so let's not call it a bear flag yet until it shows itself as a bear flag. Let's say maybe we're getting luckier than that, and maybe what we're building is a new F flag to take us higher next week when the holiday is over. Maybe that's an F flag and the target will be achieved. There are 2 ways to look at this. As you know, we became buyers last night, so we were buyers today. Once again, a round of applause for that. Omni trade. Omni bought the exact low in the S&P today. Got out at the high. Omni's trade today was to get in here, and it got out up there. I mean, wow. Go analysis. But you know why I did that? I stayed inside of what I thought would be the F flag. We bought the low of it. We got out at the high of it. It was easy analysis. So we may have an F flag here. I'd rather call it an F flag than a bear flag for now. But we'll see what pans out. The F flag would be for shorter term trading. Let's find out. So here we are, S&P, looking like it's building a flag that should take us higher and working towards that goal. Now, traders, there's been a lot of volatility. These markets are flip-flopping like crazy throughout the day, and I think it's going to get even worse, so please be careful. Look at your NASDAQ. In your NASDAQ, you've got the same thing happening, traders. You could call this a bear flag if you want to. And boy, it's a big one, and if it is a bear flag, we're going down seriously because the projection would be literally down here somewhere. But for now, until this thing breaks, let's not call it the bear flag. Let's call it what the possibility of another F flag building, and this is a much stronger looking F flag, by the way. Maybe you got another F flag building. I'd prefer to call this an F flag, at least for shorter term trading. And if it turns out to be a bear flag, hey, we'll be sellers next week. It does not matter to me. But I think for now we'll call that the F flag. So that takes us to another chart, and you'll see you've got about the same thing going on. Take this now out to the Dow Jones Industrial Average, traders, where holidays reversals we know are abound. This thing's been up and down like a yo-yo. So we had the bear flag. We called the bear flag. We had a little bit of a down day. You remove what is a bear flag and think that, okay, maybe it's actually morphing into the F flag once again. We could very well be being saved. This is nothing more than a little holiday reversal, a little holiday jig-jag, and then right back up is what should happen. In fact, I believe, from the analysis I've done, that we should take out the highs and make all-time new highs Friday, Monday, right after the holiday. We shall see. We'll take this one day at a time because we could very easily be trading down here as quickly as we can be trading up there. There's a lot of free money in these markets. There's a massive amount of volatility, but that free money will be pouring into stocks, so I would think we'll end up higher than lower. So that's another interesting chart. Then there's this. Traders, your bond chart, 30-year bond chart. Do you remember this from a few nights ago? I drew this and I said, look at these flags. 1, 2, 3, 4. Now we're in a fifth bear flag. This is bear flag syndrome. And I drew these two lines in. You were with me when I did this live. And I said, let's see if these fill in. Because what I expect to happen is during the holiday reversal week, we'll fill in the bear flag. And as soon as the week is over, we'll do this. So I drew these two fictitious lines in to see if the bars would populate. And look at this, traders. Look at how that populated. Look at how this one populated. Just like we thought it would. They would start to head up towards the top of this flag just on time for the holiday. Then you would head back down. I think you are getting your holiday reversal in the bond market. I think that's all you're seeing. These bear flags have proved to be quite fruitful over the last 6 months, 5 months at least. I believe they will continue to be fruitful for us. Traders, this is what I wanted to show you. Remember what we're looking at. Bonds look bearish long term. That's bullish for the stocks. Stocks look bullish long term. I would think that we will continue to stay that way. The stocks do look bullish long term. There is this, though, traders, and we're all looking at it. You know, what's going on right here? Is this, is this just a pullback? Is this going to be more than a pullback? That's one way to look at it, traders. Then there's this. There's all sorts of views on the street, right? You got this view. Then you got a view that says, well, Oscar, maybe this is a shoulder, and maybe this is a head, and maybe you're building another shoulder over here. Well, the head would be a little bit wider, I would think, right? You go like this, and you take that, and you take this, and maybe now we're building another right shoulder, so you've got that camp. And okay, if you do that, I'm not going to argue with this, because maybe that's what's happening. But we are day traders, and luckily as day traders, we get to look at that and say, well, if we're day traders, what's wrong with picking out the day trade out of this and going with whatever flag that is? And that is a bull flag that's building at the moment, traders. So we'll take care of the big shoulder if it forms. But for day trading, we are looking at staying inside this flag and then moving out towards the upside of that flag once the holiday is over. Traders, thank you so much for coming to today's class. I hope these classes help to keep you in tune with markets and the possibility of which way they will move. Remember that futures trading is extremely risky. And come on down to livewithoscar.com and allow me to teach you to be a better analyst. Traders, remember, keep your emotions out of trading. One of the best things you can do to help yourselves with that is say this to yourselves every morning, every afternoon, every evening, and you know what that is. Stops are in. Emotions are out. Traders, thank you so much for coming to today's class.